I always wanted to be this handsome.
You do look pretty good, Dan. So for our audience that's wondering what the hell is going on and why am I a trash panda today? Apparently I came on during the pre-show and my team was in the metaverse and I didn't have time to create an avatar, so I'm a trash panda. I don't know if I can do the whole show like this, guys. but welcome to Get Think Tanked. Today we're going to be talking a lot about ETF history and structure and all that fun stuff, as well as crypto with our good friend Dave Abner, who's lived on both sides of the wall on this. We're going to use the drinking word today, bullish, which is weird because when I drink with an avatar, it doesn't actually show it. So let me just get rid of this thing for a second. What else? I'll be a regular human for a minute. If you got questions, put them in the chat. We'll get you promoted up. You can grab a background. I'll put the link in there. And with that, I'll hand it over to Mr. Weisskopf, and I'll start promoting some of you guys up.
Yeah, Dan Weisskopf here, otherwise known as the ETF Professor, portfolio manager with Mr. Venuto for Block, and also lead ETF strategist for the ETF Think Tank, where we try and help advisors build better portfolios. Dave Dzansky, you're up.
How's it going, everyone? David Jacansky here, portfolio manager amongst these fellows at Title Financial Group. I focus on the SoFi-B, Your Own Boss ETF. It's an assortment of gig economy stocks, as well as the Amplify Inflation Fighting ETF IWIN. And today's Avatar Day, so grab your avatar and come join us. And I'm excited to introduce my good friend, David Abner. And yeah, you can't speak and you can't ask a question if you don't have an avatar. So grab your avatar and...
I see Connolly went right in, of course. All right, Abner.
Nice. I'm Dave Abner. Currently, I'm an advisor across the ETF and the cryptoscapes. I spent 2 years at Gemini. I spent 12 years at WisdomTree, 14 years at Bear Stearns. I've been, walking the halls for a while.
All right, so I think we want to start with that, right? So let's start the WisdomTree original role, right? So capital markets, head of capital markets, and then head of CEO in Europe. So you've done a lot of different things at the WisdomTree world.
Yeah. There wasn't actually even capital markets when I joined WisdomTree. We were 18 people. There really was no capital markets. We made up the title head of institutional trading and sales at the time, because we didn't really know what we were going to do. Capital markets only evolved like 2 years later as we sort of figured out, it actually came from the issue we ran into, which all issuers run into early on, which was our sales guys were going into clients, advisors generally, and saying, here's our dividend weighting methodology. Let me tell you all about it. The advisor would say, I love it. How do I buy it? And our sales guy would say, you go call your broker, and they would walk out the door, right? So we realized we needed to not only handhold the advisor on the execution piece, but teach the brokerage community how ETFs are not stocks, right? Like how to trade them differently, how to interact with the whole community. And that was where everything that we did over the next few years came from, that sort of closing process on the sale that became capital markets across issuers globally.
I mean, I love that, because like the idea of capital markets, it's so freaking important to everything in the ETF ecosystem, right? Like they're exchange traded funds. So dealing with the exchange part is how you actually get the tax efficiency part, right? The creation, redemption. And yet, it wasn't even like a real job in the beginning, even though it was the most important job, right? Making sure you had the right LMM, you had the APs, you had a way to get the liquidity. It just blows me away how different it is. I think about in the early Global X days, the first sales hire was a capital markets person, was Justin Young, who's now running volatility shares.
Yeah, it's wild because there's actually a long history of capital markets people that have gone on to run ETF issuers, right? So I went from basically capital markets in the US to moving out to Europe and running WisdomTree Europe for the WisdomTree team. You've got like Tim Coyne was State Street Capital Markets running T Row now. Like there's you can go down, even Leland Clemens over on the West at Bond Blocks is an ex-capital markets guy, and there's probably 15 of them across the industry that are now running shops. Defiance comes to mind. It's hard to come up with that list, but they're there.
Well,
All right, so David, Dan, don't let me monopolize this. Let's use the hands, even though we're in the metaverse.
Well, the funny thing is, if you think about it, without the capital markets, you just have concept. So it kind of makes sense that the capital markets role is so important.
Yeah. Look, I think to me, and this is so funny because it's not where I expected we were going to go, but we'll go to a lot of places. I think if you think about an ETF issuer, right, you've got an investment idea, and then everything else is sort of like, how do we help clients get into it? Like you gotta trade it, you've got to manage the baskets, you've got to grow the assets through creations and redemptions, right? All of those things. So capital markets, like Mike said, really touches on everything across the organization. Even the marketing team, right? When they're going to put together a video on like how creations and redemptions work, first stop is call the capital markets guy and ask him how we do that. And we've made this video. Can you make sure it's right, that we're speaking the right language, we're using the right terminology, we're going the right process, right? It's literally this position that cuts across the entire organization, and it's unique to ETFs. Like the mutual fund firms, they're all, Anita Rausch, right? Big hire at a mutual fund firm as a capital markets person. There's 10 of them because they realize that's the only position at an ETF issuer that is not replicated at a mutual fund firm. So they don't have them. And that's where they start. It's been an interesting evolution.
All right. So I want to go from WisdomTree US to Europe, right? So, you end up being the CEO of WisdomTree Europe. And I think this is also, which leads us to where we probably will spend a lot of time, which is crypto. What's different in Europe? What was it like running an ETF issuer in Europe? Everything with our show has been very much US centric. We know there's a lot going on over there. We just don't know really what it is. So let's take on Europe first in the TradFi still.
Europe is fascinating. The Europeans I experienced love to make fun of Americans because we just are born and bred single market, right? And then even now we're talking about Europe, right? But that's a misnomer, right? Like you think think America and Europe, US and Europe, like, oh, similar, right? Like you're lumping them into groups. But Europe is like 17 different identities, different markets, different rule sets. Many of those countries don't like to play nicely with each other. So it's even wrong to start and say, let's talk about the US, let's talk about Europe, right? Because let's talk about the UK, or let's talk about Italy, or, Switzerland's obviously been in the news with the banking thing. That's the biggest mistake that people from the US make when they go into Europe. And they do the same thing in Asia as well, although it doesn't seem like they do that as much because there's so many big presences there. It's a little less so in Europe, right? But you get there and you realize that this is, when you're building a European business, it's not like you're having your, Southeast wholesaler living in Florida and he's under the same rule system. You're going to have one of your wholesalers living in, Milan, and he's going to be under, he's going to have different vacation day policies, and he's going to have different rules on what he can do. And you have to sort of manage all of that. It's incredibly complex, and the clients are all different, right? You don't say the same thing to one client as another. and they have different needs. Even the collateral they want contains different numbers, right? They look at things differently across the different countries. And so actually, you know, I had always been dealing internationally with stocks and things, and going to Europe was a great experience for me. Going to live in London was amazing. It was such a learning experience to pick up this knowledge about how things really work there. It was really cool.
All right, Weiskopf,
Well,
the young professor.
yeah. I mean, do you want to continue with the, you know, the Abner bio where he went next, and then I'll ask my questions.
So I can, let me help you with that actually, because I think I know where you're going to go, and I can steer a little bit. So one of the things we did in Europe is we found out about crypto, right? So we have been sort of hearing about crypto at WisdomTree since 2015, paying very little attention, not thinking it was going to be anything big. We did an acquisition in 2017 that led us to a Bitcoin ETF filing. And we were able to actually launch the first Bitcoin physical spot ETF in Europe, in Sweden. And that's the WisdomTree fund in Europe that exists today. So that was actually the first one. That was a really, that was the beginning of my transition into crypto sort of more full time. I started building out the WisdomTree crypto strategy. I moved back with my family to the US. I got to know some people at Gemini. They introduced me to the twins. We got to know each other, and then I joined there in October to sort of help them build out their institutional business. So then I was deep crypto, right? I was like deep 6 on the crypto side for 2 years. Is that where you wanted to go, Dan?
That is, you just teed me up, because
What year was that in? What year did that first fund launch?
I think it was 2018 we launched that fund. Man, no, maybe it's yeah, it must have been the end of 2018. And then I joined Gemini in October 2020.
So perfect tee up, because you know, as the portfolio manager with Mike on Block, our focus is on the infrastructure, which ends up being a conversation around around infrastructure in the trading desks, right? So, you know, when you review your background, you know, how do you see a comparison between what's happening on the trading desk infrastructures and how that's evolving versus the ETF side? Because without that infrastructure, you got nothing.
Yeah, so okay, there's a lot to sort of unpack there. Look, I think there's a couple of things happening. First of all, there's things are constantly in the financial markets going faster and faster. So, you know, from 1998 when I started trading ETFs to the way ETFs even trade today, super fast markets, you know, much more technology, you know, high speed calculations and action, right? The news cycle as well. The news we watch, the news we understand or intake and react to so much faster than it was 15 or 20 years ago, right? Which is causing the markets to move much faster as well. Crypto is, in my mind, if you're asking the difference between these, like crypto trading desks are dealing at, like, I think of it as like warp speed, and the marketplaces are the next iteration, in my view, of where we need to get. So let's think about a few things. If you think about the NASDAQ stock exchange, right? Lovely business. They show up at 9:30, they run till 4 o'clock. If they need to make an update to the exchange, they shut it down on Friday at 4. They've got 48 hours almost to upgrade it, fix it, change it, do whatever they need to do. Now contrast that to a crypto exchange. Gemini, 24/7 exchange, can never go down, or that's the idea. All upgrades, adaptions, anything that's done is going to be done on the fly, right? Like that technology almost doesn't even exist for the traditional US exchanges yet, right? They, so that to me is an evolutionary point for the US markets. I'm a proponent of 24/7 trading. You can't go backwards, right? If you could trade crypto 24/7, there's no reason why you couldn't trade stocks 24/7 at some point. And I think, there's lots of things that people throw out there about why that's bad, why that's good. We can talk about that for a while. But the one thing that stands out to me is, through ETFs, through crypto, the common thread of my thinking is like what's good for investors. Many of our investors here on the call today, they work full-time jobs and then they go home and they look at their portfolios and they want to make adjustments. Why should they always have to deal with a stock market that's closed when they can make it? And what happens is they'll put in order flow and it hits the, what the busiest time of day on the exchanges is, the opening auction, and then sometimes the closing auction, but primarily the opening auction, right? Why should that be the busiest time of day? If we could smooth all that out if we just kept them open all the time. There's a lot for you there, Dan.
No.
You just gave half of our traders a title like a heart attack. So
Look, you just run it on 3 8-hour shifts, right? I used to work, when I started at Bear Stearns, I was trading in Japan. I would come in at 6 p.m. I was supposed to leave by 3 or 4, but most of the time I was hanging around at 7, 8. But you just work nights, right? And I was doing it from New York. You just run these things with, then we moved to a 3-desk system, and you pass the book between London and Hong Kong and the US. It shouldn't make your traders nervous. It's just the way that business is run for years, really.
So the reason why I went there and with the question was, it seems like, and this is kind of transitioning to regulation. It seems like the regulators may be looking closely at those exchanges, otherwise known as the infrastructure, as a way to try and control things or slow things down.
Yeah. So, I don't think. Well, I guess it's like this. The way I would think about it is this: if you work at a crypto shop, what is most notable to me is that the real crypto enthusiasts are like, the history doesn't matter. We're gonna rebuild the financial system in the way we think it should be built and ignore traditional finance, TradFi, right? And that's not really the way evolution in the financial markets happen. Don't tear down one system and just rebuild another. And that's probably what I think of as the biggest problem with crypto today. And because there's a massive demand for blockchain infrastructure in financial services. So let's think about the history of what we all know in the ETF industry in particular, but financial services in general. There is a constant move towards lower and lower fees, right? It's the only chart in the world that never has a pop. It only goes in one direction, top left to bottom right, right? Fees are always going down. So if you're an ETF issuer, you're an asset manager, what is your goal? You need to maintain margins in an ever more competitive, fee-challenged industry. And the only way to do that is to run better and more efficiently. So if you can move to, and we'll talk about this, if we can move to securitized token universe for trading that works 24/7, that has internal trust, you can save a lot of money on clearinghouses, administrators, things like that, which can help you preserve your margins in the end. That's really the whole thing that's going on the infrastructure side. So it's not that the regulator, and if you look at the regulators, right, you notice, think about crypto, right? Fidelity, BNY Mellon, State Street, NASDAQ just announced they're launching crypto custody. The regulators are not banging on their door asking them to stop. They're actually talking to the crypto natives who sort of tried to build outside the system, right? And rein that in. And I think that will be good for evolution of this industry overall, right? So That's the way things are going to go there.
All right, so I'm going to chime in now because I'm going to bring Samir up on this. So he's at Hashdex, and we have that the DeFi ETF together. And him and I got interviewed by the Block this week, and that's exactly what they were asking about. The whole idea of, all the things outside of the system and versus what's inside of the system. Samir, I'd love you to just chime in on this because we had this exact conversation a couple days ago. So fire up.
Yeah, sure. Hey guys, good to be here. Great conversation. So, I mean, it's tricky because the way I think about this is think about everyone's talking about DeFi and crypto, and I think that type of terminology kind of scares away people from traditional markets.
Yeah,
I prefer to think about this as an internet financial system, right? Something that will run on top of the internet, will allow to exchange value and maybe offer some financial services on the internet. But the traditional financial systems, the ones that are linked to countries and to local regulations, they will keep existing, right? So they're not changing overnight. So you still need to build this integration between those two worlds in a way that you can offer both investment opportunities on these internet financial systems to the traditional world, but also bring tokenized assets from the real world, from the traditional capital markets to this internet financial system, to DeFi. So there's those two bridges to be made, and of course there's some people that are more libertarian, I would say, and think that you shouldn't have a local capital markets. Everything will be global and tokenized and on-chain and decentralized. But I think we have a long way there. There's still a big generational shift to happen until we can see that. So I think in the short term, there is a mass audience or a mass base of retail investors that are not comfortable interacting with Binance or with any other offshore exchange. They're even not comfortable in having their own crypto wallet, and they want to have a professional asset manager to handle those assets for them. And if you look at our audience here, our investor base in our ETFs, most of our investors have more than 40 years. Most of our AUM is concentrated in investors with an age between 55 and 60. Right, so those are not the investors that will go to Binance and create their MetaMask wallet or start doing their cold storage on Ledger. And if you think about institutional investors, those are the investors, the portfolio managers in the end, which are selecting how to invest in. They also have a mandate to have to make a very small allocation to crypto. So we're talking about 0.5% allocation in their portfolio, 1% allocation. They're not going to do the whole due diligence and set up a new back office team just to handle crypto and on-chain transactions. They prefer to have a professional manager taking care of that for them. So I think there's the short-term opportunity is really to build this bridge with the regulators, and thinking when you think about centralized services like exchanges, they should be regulated like any other, financial intermediary. We're talking even about gambling, right? So how, perpetuals and derivatives in crypto, they look like gambling, and gambling is also a very regulated industry, right? So why not?
It's ridiculous, right?
Yep.
It's just ridiculous.
Let me ask one quick question though. You guys were talking about the regulators working with TradFi on DeFi projects, but isn't everything going on with Coinbase and the Wells notice exactly against that? I mean, there were rumors that banks that had higher exposure to crypto were ones that were being targeted, et cetera. I think that was kind of proof false. But it does very much feel like it's these VC-backed titans trying to destroy TradFi for their own benefit of their investments versus the government. I don't know.
That's a good one, David. Weisskopf and I have done some looking at Coinbase, obviously, because we run a fund that happens to own a good chunk of Coinbase, right? So personally, I think this Wells notice is bullshit. I think, and I'm curious, Abner, when you're at Gemini, you had to be talking to the regulators all the time, right? So I think it's not that Coinbase asked and was told, don't do this, and then they went and did it. They asked, they said, we're not ready to comment. And they slowly did things And now they're coming and saying, we want to comment. Is it going to take Coinbase down? Fuck no. This is just pulling back power that they weren't willing to take in the beginning. That's how I feel. But I didn't live it the way Abner did. So I'm
No,
curious.
I agree with that. I think this is going to lead to either they become much more highly regulated, like like a money transmitter, or the path they're going on, or they get bought up by Schwab or somebody like that, who's already under the regulations and doesn't really have a crypto solution yet. And if I were Schwab, I'd be looking at Fidelity and saying, wow, they've got 300 or 500 people focused on this. They're just waiting for securitized tokenization, and then they're going to launch an onslaught that we're going to be left behind on. I'd be thinking about things like that. Look, I think the interesting piece, actually, I think that Samir, what you were saying is about where you started was about terminology, and that goes back to them trying to sort of ignore the past and build an entirely new and unique financial system. Let's have a crypto winter instead of a bear market. Why can't we just call it a crypto bear market like we've called bear market forever?
Yeah, there should be like a chart that says, a fork is a split. This is that.
Right. And it was they're why do we have earn instead of stock loan? Like let's really figure out what
security lending. Yeah,
like it's almost like we made a bit of a I think the ETF industry made a mistake trying to teach clients a little bit too much about creations and redemptions, as opposed to pounding on the liquidity exists and we'll explain to you how. But it's like we went a little too deep, and everybody's like, oh, can I create a CTF? Well, for a while they were like, can I just create the CTF? And it was like, no, you can't just create the CTF. We have to walk you through it. Like, you got to sort of back it up a little bit. We get to a common language, right? We already have this common language. Why does crypto need to be different? It needs to be embraced. And I think that's where we're going. It takes a while, right? The evolutionary process, like there's a ton of the smartest people I have ever met, and working on security tokenization, right? It's coming fast, but we need to solve the problems of wallets and who's going to store it and how does that work and how does that become secure. Money and these things on grand scale. Look at the ETF industry. We are 30 years in now, right? And we're just at $7 trillion. We have a long way to go, and it takes so much time. By 2006, the ETF industry didn't really start making noise until 2008, right? The financial crisis was good for ETFs, money in motion. You may have the same thing with tokenized securities. We may have the next 5 to 10 years of tokenized securities being around, but it'll take the next bear market before people want to unwind their ETF positions and move into a tokenized framework, which could be, hopefully that's 2025, really, but we'll see,
So just to help out before we go to Samir and get in order, it sounds like we're all bullish on regulation. Go ahead, Samir.
So like just offering some insights on the regulatory side. First, like unfortunately, what is happening in the US right now on the regulatory landscape is a total mess, right? So we have absolutely no guidance. Like I have the SEC saying that everything is a security, then go to like the FTC and saying there are commodities, and you have discussions in the Congress, like the whole mess around stablecoin, and now like Circle, a very credible issuer of stablecoin, like being risked because it has like part of their funds in US banks. Coinbase, like the most regulated, like really trying to play by the book and push the regulation, is the only company, the only exchange that is sued by the SEC. They haven't like went after Binance up until now. We saw like now like the moves of the FTC against Binance, but they're trying like to hunt the good players, right? And that's crazy. But I think like in a certain level, they are right. In terms of like for financial intermediaries, for what we call like the virtual asset service providers, you need to have segregation of functions. So you need to segregate custodian from the exchange, from the broker dealer, from the market maker. You can't commingle all those functions because there's a lot of conflicts of interest.
Mhm.
And that's not by chance that we ended up with the current market infrastructure full of intermediaries. Is because if you don't have that, you don't have checks and balances, and then you have room for conflict of interest. You have room for frauds like the Madoff scheme, you know? So I think in a certain level, the SEC is right in theory, like they should demand those players to start like segregation the functions and giving more disclosure. But the way they're doing is very controversial. They're doing this by enforcement instead of, you know, giving clarity and creating a framework to regulate, which they can, right? So although they say that the rule is out there, is one like invented, I don't know, 19 years ago, it's the rule. They can define the rules for crypto asset service providers. Doesn't matter if it is a security or if it's not a security. Like if you're handling other people's money and assets, there are good practices you can apply, right? So, and that's how regulation is evolving in other countries. And unfortunately, we're not seeing this developing in the US. And what we're seeing actually is like entrepreneurs and you know, people that really want to make serious business going out of the US, unfortunately.
Yeah, I agree with you and I don't agree with you. I agree with you that it's there's a case of really bad parenting right now, right? Like you don't know whether to go ask mom or dad, and neither of them agree, and they're fighting, and you're getting bad messages as a crypto child, and you just don't know what to do, right? Like that's sort of where everybody is right now. So I agree with you completely on that. Where I don't agree, and this is what is, we actually do want to get to a place where custody, clearing, execution can all happen in one world. The technology is there, and we shouldn't not do it because we're saying that's hard to regulate. We should figure out how to regulate that so that we can determine the conflicts of interest. And obviously, like if you look at the banks, right, we're not always going to get it right, but that we can do it, right? So if you go back to my initial, like, we are trying to run, we're trying to build a system that is more efficient, that is leaner, and in the end less costly, right? So that we can run quicker and smoother and cheaper. You can only do that. You can really do that in this one unified system. We just have to figure out how to make it work, right? That's
but how does that work in like reality, right? Like we still can't put like ETFs in most 401k platforms because we can't agree on like what the closing price is. What happened is NASDAQ going to run two markets in parallel, like one as they're doing now and one on a blockchain, and the one on the blockchain is just 24 hours a day, and 401ks are just going to stay on the traditional platform and be the only ones left? Like how do you deal with those basics? Is it going to be systems running parallel, or is it going to be a light switch off and a light switch on? Right? How does that work? How does that transition actually work?
And just to
part of the
complement,
problem is the people, right? Like investors in this country are so lost, right? Why aren't they out in the streets, like in Paris, being like, hey man, we need ETFs in our 401ks. And it's not about finding a closing price. It's about,
dude, I was there. I was the only one standing. I was the only one standing with a picket, screaming for ETFs in the 401k. There was no one else there. No one else knew what an ETF was. Sorry, I didn't mean to cut you off.
Yeah, no, it's right. Like
was that January 6th, David? Were you there January 6th going, I need a
ETF? Jesus Christ.
We'll skip that.
Going
after. Bullish. It's that bullish.
I totally agree with you, like that we are building a more efficient financial system. But if we're talking about asset tokenization and smart contracts handling those functions, when you're talking about people or companies handling those intermediary functions, then I think like the traditional framework or part of that should apply. So like if we're doing on-chain, totally agree with you. Like it's more transparent. All the rules are there. So you don't even need a regulator because the regulation is written on code, right? But if you're a company and you're acting as a clearinghouse, come on, you need to show your risk policies.
No, yeah, we need to build it into the regulatory framework. I sort of, it's weird, but I sort of agree with Gensler that a lot of the framework already exists in traditional finance, go back to the naming. And this isn't something totally new, and it doesn't sit outside it, right? And we just need to figure out how it all fits. And I think it's just going to take a long time to think it through. I mean, look how long it takes. I mean, it took us like a decade to get down from quarters to eighths to pennies or more, right? Maybe it was 15 years, right? I mean, these things, they just go slowly.
They do take time. And one of the twists of irony that I find existing is with a company, Galaxy Digital, right? They're in New York, they're in Canada as a registration, right? Meaning that's where they're domiciled technically. They've spent, I don't know, something like $40 million to try and come to the US and be registered under the SEC pursuant to NASDAQ, et cetera, right? And the fact of the matter is, and I really want that to happen, by the way, but the fact of the matter is the regulators need companies like Coinbase to regulate, right? Willing participants. And I think that Coinbase is an example. The reason why we weren't really shocked by the Wells notice is you could see that they were antagonizing the SEC. It was going to happen. So there shouldn't have been any surprise. So that's just a statement. Here's my question though, Abner.
Before you ask, can I give you a corollary statement, which I thought was really relevant to that?
Awesome.
I had dinner with the head of the asset management group at one of the largest asset managers. This was a while ago. This is about a year and a half ago. And I was deep in my crypto, evangelism point. And I was like, come on, man, when are we going live with crypto trading on your platform, blah, blah. And he was like, look, we are paid not to be first, but to be right. We don't care if we get there when everybody else is there already, when it's tried and true and regulated and safe. Our customers are paying us for all of that, not to be the innovator. And I think that's the way the US regulators look at things, right? We're going to talk about, or we talk with, somebody brought up Canada, right? Yeah, Canada launched the first ETFs. It doesn't have to be the US, but look at the size of the market today, even though we came out a year later or whatever it is, right? Like that's the important piece here. And I think that's the way the regulators are going.
Well, if that was JP Morgan, they just allocated to Tiger Global instead. So
So let Dave, let's pivot a little bit to GBTC. Okay. Bring us up to date on your views on that, because I desperately want to hear those views.
All right, look, I have
well, let's just make it clear. So we're not making recommendations. None of that's fun stuff. But the question is on the Grayscale product and what your thoughts are on the GBTC.
I'm assuming you're asking about the launch and the conversion to an ETF, right?
Yes.
Current discount, potential, the lawsuit, just, you're about as in touch with these people out there and free to say what you want as anyone. So I'm curious your thoughts there.
I'm going to say it this way, and I know nothing, right? So I have no insight, but I do know that, and this was in the news, that the Gemini Earn product was utilizing Genesis exclusively to give its earn money to, and we've all read that there's that huge amount of money sitting in earn that they haven't been able to get back, right? And we've read in the papers that Genesis was, there was some lending going on that was like sort of hand in hand with creations into GBTC at some point as well. This is all stuff that was in the papers. I think that no matter what happens as a result of the court case, that fund will not be open-ended yet. They will not allow them to open-end because there is a risk that there is some traceback of some of those assets to some activity in the markets that shouldn't have been taking place, and a potential clawback of assets that are sitting in the fund, right? I have no insight into this, but I think this is potentially possible, and it partially explains the discount. If you think about it, everybody's like, oh, everybody wants to get out, like why? But really that's the discount isn't saying that there's just tons of sellers, because there's somebody buying every time you sell, right? The discount in closed-end funds and in a fund like Grayscale is all about value of the underlying assets, people making estimates of what's actually in the portfolio. Will it pay the right dividends? Will there be a rights offering? What's going to happen to those assets, right? So the discount to me is saying, I think it's a 50% discount today. So that's saying that all the investors looking at this believe that, if the fund in NAV terms is saying there's $20 billion in assets, that there's really only maybe $10 billion of true value within there, right? And I'm just making up numbers on how many assets are in there right now. But that's what the discount is reflecting to a degree. So I think there are some people that think that maybe there will be some form of, sort of lean on some of the assets in that fund at some point. Now, the other side of the story is that if I were Grayscale, I don't, of course, you would want to open-end that, and immediately half those assets leave the fund, right? Because it then, it all gets redeemed out, and it's a half the value fund anyway, right? Because everybody starts to sell or buy. You would want to disperse all that. It just becomes much more difficult. You want creations, redemptions. You want a lot of stuff to start happening. And I don't blame them, right? And of course, they want to have the biggest and the first ETF. I see what they're trying to do. I think it's never a good idea to sort of sue the SEC. But I do think that, like I was saying, I think there's something else going on in the background that we don't know yet. And that's my view on it.
Wow.
I also think, since nobody's saying anything, I'll keep going for a sec. I also think it's this, I'm doing some work with a few issuers and a few issuers focused on crypto ETFs in particular, right? And they're, thinking about novel ways to bring a spot Bitcoin ETF to market. So I'm pretty deep on some of these conversations. I'm not as excited about it as everybody else is. Like, it's the topic of conversation du jour. There's a couple of reasons for that. One, there's so many other ways to get Bitcoin. So whenever people draw comparisons to gold, and they're like, gold became a 50 or $100 billion in ETF assets in gold today, right? That's what's going to happen in Bitcoin. There's a couple of reasons maybe that doesn't happen. I know, Samir, you would like that to happen immediately, but first of all, if you think about Bitcoin and Ethereum, there's not as clear a winner between gold and silver as there is between Bitcoin and Ethereum. Still, it's super early. In my mind, actually, there will be a flippening. I think Ethereum will be the more valuable platform as compared to Bitcoin at some point, right? So, how important is the Bitcoin ETF if you really want the Ethereum ETF? And forget it, right? If you're waiting another 7 or 10 years to do that, right? You're sort of, there's that. There's also this, you just didn't have access to Bitcoin or gold the way you have access to Bitcoin today. Coinbase has 100 million accounts or something like that, right? The numbers are huge. I get that the advisor community, exactly like you said, Samir, is waiting for a managed solution to build it into their portfolios. But I just don't know how big that is and what that's going to do in terms of volumes into a Bitcoin ETF in the end.
I think Gensler, by forcing it to go futures first, really took a lot of the air out of the balloon. And part of it is also the freaking futures are working, right? They're tracking damn well, right?
Yeah.
So
work. There's ETFs in Canada. There's ETFs in Europe. There's ETFs in Brazil. Yeah. And money can move around the world pretty easily, especially to Canada. But they're $1 billion ETFs, but they're not $50 billion ETFs.
Yeah. So in the chat, the Vixologist, which he's got his avatar on and he looks so young, it confuses me. I can see him kind of smiling. He asked any thoughts on the filing for the 2x Bitcoin ETF. It's funny. I'm behind a Bitcoin futures ETF. I'm behind Block, the largest blockchain ETF. And I've always advocated that Bitcoin doesn't need an ETF. ETFs need a Bitcoin ETF, right? It's good. It's better for ETFs than it is for Bitcoin, right? Right. But it doesn't hurt Bitcoin necessarily because it's the bridge that Samir was talking about. It's the revolution that happens over 10 years instead of doing it overnight and being the anarchist that tears everything down and becomes the maxi. The people who are behind this ETF are friends of mine. I love them. I've known them for years. But I think that's a weapon of mass destruction. I don't think it's good for ETFs or for Bitcoin that there's a 2x Bitcoin futures ETF. That's my opinion.
Why that should be. So we've been answering this question, Mike, for years, right? Like, should there be 3 times leverage? That's like, I use the old analogy, right? Like of Home Depot, right? Like, should we take hammers off the shelf because people are using them during riots to break windows, or should people be able to use them when they need to do some home reno, right? Like, I think you can give people tools and you can educate them, and there's a place for all these different tools, and I think it's cool.
I hear you, but like my problem with the idea of the Bitcoin ETF has always been Bitcoin's message is bank yourself. Like, I'm gonna tell you, I had a nightmare this morning that I lost my my ledger, right? Which I have it. When I've talked about it, you've asked to see it. I won't even show people it. Right? Like but I woke up thinking I lost it. Like, being your own bank is freaking scary.
I never want to be my own bank.
I understand, but that's the message, right? And an ETF is a contradiction to that message. But I understand it, right? Like, you can't have people become their own bank overnight. The actual banking system has to continue to fail before they'll actually do the work. Okay, I can get through that contradiction because I can see it as a stepping stone. 2x Bitcoin is not a stepping stone to anything. It's just taking TradFi and levering up something. Like, it's not a tool. It's not, like, I don't believe in Bitcoin as something you really are playing for speculation anymore. Like, there's no value in speculating Bitcoin. There's value in having speculators in stocks because you're trying to do price discovery, but the price discovery of Bitcoin should be, or it doesn't need the same capital markets issues. I don't know.
But Bitcoin's just an asset class. There's other asset classes with similar volatility that have leverage products. It's just like, where are you putting the leverage in your portfolio? Like, I don't know. Yes, some people.
It's like philosophically, David. It's like a knot in my stomach because I want the core Bitcoin belief is contradicted by putting 2x on it and doing it through freaking TradFi futures, right? Like, so I'm just venting.
Well,
I hope they raise money for their sake. I like them, but I will not be buying a 2x Bitcoin ETF.
What you're saying is you like the stock infrastructure play, right? The blockchain infrastructure play.
No, that's not all I'm saying. I'm saying I hate seeing TradFi co-opt the message of Bitcoin. Right? So, like, TradFi giving access to Bitcoin is one thing. TradFi manipulating it, which is what FTX was. Like, part of why Bitcoin's been going up is FTX is gone, and it's a hell of a lot harder to short Bitcoin. Right? Like, so I hate the co-opting of things that are not beneficial in our system being used in the system that's supposed to be better 10 years from now or 20 years from now. I don't know. It's philosophical. It's not real. What am I going to do? Right? Like, I can't stop it. Right? I'm not the regulator. The regulator can't even stop it.
What are the chances of it getting approved in 2023?
They wouldn't have filed for it if they hadn't already had discussions with the regulators. Everybody. So right after the first one of these got approved, all the people started filing for 1.5 times, 2 times. AXS did. We had a filing ready to go. We didn't place it. Because the regulators all came out and said, don't do it. We're okay with +1, and that's it, right? Like the regulators told everybody stop. They wouldn't have filed for this if they haven't re-engaged with the regulators and have an idea that they're either going to go through because it's a 33 Act, it's going to go through the 240-day 19B4 process. So they're not stupid, these guys. They know what they're doing.
They've also filed things that the SEC told them not to before and eventually got through. So maybe, maybe they're just stubborn enough to do it again. So.
Yep. Yeah. Samir, you got your hand up. I don't know. Are you going to come on the philosophical rant with me or no?
Yeah, just offering like a nuanced perspective. So Bitcoin has its use case and its philosophical reason for existence, like be your own bank and, like building this future where we can be our own banks if we want. And maybe in the future, that would be the case for the majority of the population, let's see. But meanwhile, what we have is first like an investment opportunity. So I think that's the second, I would say, use case for Bitcoin. And the third one is the speculation, pure speculation on an asset that has such a high volatility. Like you can gamble on it, you can speculate on it. So I believe that the role of like regulated financial products is on the investment side. You cannot use a Bitcoin ETF to be your own bank. You're never going to be able to hedge against, a banking crisis, like having a Bitcoin ETF. But what you can do is diversify your portfolio and get this upside potential of this new technology that currently has no consensus, like whether it's a good store of value or not. And maybe in 5 years or 10 years, we will have central banks putting Bitcoin on their balance sheets. So there's a big price appreciation opportunity there. And from this investment perspective, it makes sense to have regulated products like an ETF. When you're talking about leverage, maybe there is a function, there is a role for a 2x, something like that. When you're talking about 20x, 50x, 100x, like those crypto exchanges offer, that's pure gambling.
I hear you. All right, let's go somewhere else on this. What else do you guys want to cover in the last? There's a question from Tiago. Yeah. So Tiago was asking, and I see Eric's answering it. So let's see. Any thoughts on how AI revolution is going to impact the crypto market? Negative, positive, neutral? Does AI change anything when it comes to crypto? What are your thoughts there, Abner?
Ooh, I'm not. I think AI impacts everything. So I don't have the nuance of where it's going to impact crypto yet. But it's sort of a cross-border kind of thing. It's going to be everywhere. So
Eric, you want to chime in? And I see you wrote something to Tiago there.
Yeah, sure. The only thing that I don't know if you guys played around with any of the cloud-based AI.
Did he freeze for everybody or just me?
Everybody.
Go on about Hitler and gosh knows what else.
Oh my gosh.
That's not possible.
Hold on, Eric, you got to restart because you went blank, and then the first thing we all heard was Hitler. So, so restart, please, so we don't lose context on that.
so the I don't know if you played around with the Azure or Google Cloud AIs yet, but they have lots of guardrails on, and the open source ones don't have those guardrails. So you could start spouting out about Hitler or something like that on the open source ones. Getting to Web3 allows the detethering from those corporate clouds so that anyone can create anything they want with or without guardrails, for better or worse. In fact, you can create an entirely autonomous AI that lives on Web3 if you want. Whether that's good or not, I don't know.
Fair.
Okay, we're all scared to death again. That's what I love about AI.
And now we're all shadow banned on Twitter as
well. You guys heard about Skynet from the Terminator?
Yes.
Blockchain plus AI. That's what it is.
Blockchain plus AI.
Yeah.
I mean, you know that sometime this year somebody's going to launch a blockchain AI fund, right? Like it's not us.
Launch the Skynet fund.
Yeah. Yeah. All right. Well, I think on that positive note, we were only bullish on one thing today, and it was regulation. And now we're scared to death on AI. Abner, always great to talk to you. We really appreciate it. Anything you want to give as parting thoughts as we wrap up?
My pleasure. Look, I actually think bullish is the word of the day because I'm pretty bullish on everything right now. So if you look at the markets in general, where the S&P peaked probably around the end of 21. We're almost a year and a half or a year and a quarter in from the peak. We've been through a massive sort of speedy crisis over the last few weeks. We may be only partway through, but the market's holding up incredibly well. Crypto is stable through like everything that's gone on over the last 6 months. It's found a bottom and bounced. It's already starting this year with a tremendous positive momentum. So I mean, I'm bullish. I'm very bullish on the next few years. Like we could find another bottom. We could find some new lows. But in terms of sort of having been through a lot of the worst over the last 15 months and finding a bit of a base and starting to work towards a new long-term bull run, I love where we're coming into things right now, right? Like I love starting with rates at 4.5% and 5%. I think we're just in a really good position for certain things going forward.
That sounds like Abner will buy the 2x Bitcoin fund, David.
Yeah, but we're gonna have to extend the show another 2 minutes because I have to ask, like, aren't you essentially saying that rates have to go from 4.5 down to even 2 to then push this bull run? And isn't there a lot of economic chaos between A and Z? I mean, look, I also think earnings are going to be good this year. Just future growth prospects are just down, right? Everyone's firing to beef up earnings. This is the last hurrah on earnings expansion, like this 2023. But like, what happens after there? I was going to ask you, like, how much crypto goes up with each 100 basis point move in Fed funds rate next year, right? Like, or whenever it is. I'm not saying it's coming this year, but like, what's that delta?
I don't think you need a 200 basis point pullback in rates for the market to start rallying, right? Like we were in a super unique period, but the market has rallied through high rate regimes over the years, right? Like it's not unusual, right? What I think is we're getting to a place. Remember, we're coming out of COVID, which was insane, right? And insane for the economy, but we didn't really know how or why, and the markets really rallied through it. But there were these massive disruptions, and we are coming back to a state of normalcy, I think, right? So I'm not saying we're going to be up 50% or anything like that, but I'm definitely thinking that we are sort of way closer to the bottom than the top right now, right? Like we're stabilizing, we're finding a place, and then we'll be able to build and grow from there. Like you say, firms will learn to manage in a higher rate environment like they've done in the past, right? Like you're just saying the last 20 years, but if you go back 80 years, there are plenty of high rate environments where firms did great, right? It's not an impossibility, right?
Yeah. So at the end of the day, investors need a light at the end of the tunnel, right? They need to see that. And I think what you're saying is people can envision that light at the end of the tunnel and buy the dips when they do occur, and then we can move higher.
That's very close to what I'm saying. Yeah.
I love that we went from AI is going to kill us all to a bullish tone on the markets. Listen, everybody, Abner, thank you. We're going to take next week off since it's Thursday. There's going to be the right before Good Friday, and most of you will be dealing with kids and spring breaks and stuff. And so we'll see you guys in April when we restart. As always, check out ETF Think Tank, all the stuff that we've got coming out. I'm used to doing so many spaces. I'll tell you all to follow us, but we don't have that up here. I'm tired of too many mediums. That's it. Thank you all. We'll talk to you in April. Thanks, Abner.
Bye, guys. Thanks for having me. Bye, everyone.
Right.
Thanks for bringing the fun, Abner.
Yep.
Lots of fun.
I like the metaverse.